In our scenario, there is still a flip of a coin between Kamala Harris and Donald Trump. If Donald Trump were to be reelected to the US, he's very inflationary. And so I think that would cause the Fed to stop, right? And that is the loosening cycle that is. So for us, for example, initially we thought, okay, the next FOMC is 3 days after the election. That would be anyhow a pause because we know it's going to be a contested election no matter who wins, right? So we were a bit in the camp that maybe they should front load. And I think that's what the market is getting to grasp with, and that's why they tested this 50 bits. Now it looks, maybe because of the polls also, that there's going to be a very gradual loosening, which is really what the US needs today. This is the forward guidance 101. This is getting away from data dependency, which was really a mess when it comes to how markets reacted to this. Look at the bond volatility. And to me, I think that's why it's switching. The odds are going back to something much more orderly. Than trying to get something through, because indeed, were Trump to be elected, there is a risk of inflation picking up again very strongly in 2025 in the US, right? So now what is out there is at least 75 basis points till the end of the year. And then, 25 is the big question mark. For us, it is these 5 rate cuts that Marcus showed, but it is really a question mark because Trump could actually bring back tariff inflation, labor inflation, and certainly also the devaluation of the dollar is a big issue when you think about how much import inflation could bring to the US. So that's what markets don't know much about because nobody knows who's going to win this election.